Oh my gosh. Hey, Kendra, you couldn't hear me this whole time. I feel like just restarted the entire live. Oh my gosh. Wow, that was good stuff too. Oh my, thank you for letting me know. What? I was going in. You girl was dropping the knowledge and everything. Okay. All right, dang yo. Okay, so to rewind. Okay, so as I was saying, hey, welcome to Sipping Wealth Live. Okay, so welcome y'all. So today I'm going to be talking about financial versus state, navigating by federal versus state income taxes. Okay, dang yo. I'm salty that the audio wasn't on this whole time. Okay. All right. Let me get over it. Okay. I'm better. So I'm going to be going over about 15 to 10 tips about like how to navigate state versus federal income taxes. We have a lot of people that are just moving in general. A lot of people coming in from different states to Jacksonville. A lot of people that are like, hey, I want to move out of Jacksonville and I want to go to a different state. Or, hey, I want to expand my market and I want to do business in another state while I live in Florida. So I want to make sure that y'all, know what the need to knows are when navigating a different state, or maybe even you want to go and you're like, hey, I want to live 6 months in Panama, or I want to live 6 months in Belize. I had a client that was in Belize for 6 months. What does that look like for me tax wise? Okay, so navigating the different tax laws depending on where you're living and understanding, what to do. All right, y'all. Okay. Thank you so much, y'all. Let me know you can't hear me. Okay. All right. First step is the first tip I'm going to go over is understanding the basics. So you need to understand the fundamentals and knowing that, hey, if you're going to move or if you're going to do business in another state, whether or not they have state taxes. So if you're like, hey, in Florida, I've been here for so long, I'm ready to get out of Florida. And I want to go to Georgia. I want to go to South Carolina. I want to go to North Carolina. I want to go to New York. I want to go to California. Knowing that those states have state taxes. So you want to make sure that, hey, like you take into account. In Florida, we were just dealing with federal taxes. So in these states, you have to pay what you would normally pay in federal taxes to the to the IRS, but that state says, hey, you owe us 3% of your income as well. So yes, you pay the IRS 20%, but you have to pay us 3%. So in total, you pay 23% worth of income taxes on a state level and a federal level. All right. So understanding that, hey, yes, for states that do get taxed, you tax twice on whatever income you're making. Now, if you're living in Florida and you're like, I want to do business in Georgia as well. I want to do business in North Carolina. So I want to expand my business in these other states. And say you generated $50,000 in Georgia. Well, the state of Georgia said they want a piece of that pie. So you are going to have to do a state return for the state of Georgia for that 50,000 that you made in their state. And then whatever their state percentage is, you would pay that to them for that particular income. And then on a federal level, you would pay, say you made 100,000 in Florida and you made 50,000 in Georgia, you would pay on a federal level taxes on the full 150. On a state level, you would just pay 50,000 taxes on that 50,000 made in Georgia, because you live in Florida. All right. So understanding the fundamentals when you're dealing with state versus federal taxes. The next is to understand these state laws. So when I have my clients in different states, now I have clients all over the place. I have clients in different countries, Germany, Brazil, throughout different states. I just had a client earlier today. She's in Colorado. So depending on which state you're in or where you're located, knowing that, hey, they have put different laws. A lot of the laws, are generally the same, but they do have a different laws that you want to make sure that you're abiding by as well. So when I do have clients from a different state, how I navigate it is, okay, if let's say it's a newer state, maybe it's a state that I haven't touched on just yet. Hey, client, let me go ahead and make sure that I'm more preview to the state laws, so that we make sure that we get you, we file it correctly. We get you squared away, because there are different credits associated with the different states as well. A lot of, your California, New York, Illinois, some of those states, they do have additional credits and things that you can tap into. So understanding that, that's why a lot of times it is good to have a tax professional that is in those states, because they're in that state, they know what credits and things like that. Someone that is not necessarily in that state will have to do more research on that. So I mainly pick up those clients when there's more like tax concerns, or general tax issues. But knowing your state laws, tax laws, making sure you know that. In Florida, we have it simple and easy. We don't have to worry about state laws here. Now, on a business level, depending on your business entity, you do have your state taxes as well. So if you're a corporation, you do have some state taxes, depending on where you fall in under, as far as your business is concerned. Okay. So it's not just that, hey, no matter what entity type you are, Florida doesn't have any state taxes. We do, but on an individual level, we don't. All right. The other is to a huge thing that a lot of people don't recognize is you can actually take a deduction on your federal taxes for the money that you're paying to your the state taxes. So if you're doing an itemized deduction on your return, say you had medical expenses, charitable contributions, and all this other stuff, property taxes, and you're already doing an itemized deduction, you can also deduct the taxes that you pay to your state as well. So if you pay that 3%, that, for example, that I was using before, that 3% that you had paid to Georgia for their state taxes, you can go ahead and take that deduction on your federal tax return. So it can help generally, if you are doing an itemized deduction, help lower your federal tax liability. So a lot of people don't know that. And that goes for also sales tax as well. So sales tax, when you're but a lot of people, you're not going to sit there and collect all the receipts every time you go purchase something at the store. But that sales tax that you're paying and things like that, if you're doing an itemized deduction, it does help with any taxes paid to the state. You can go ahead and take that deduction and utilize it as well. You just want to make sure that if you are taking a deduction like that, that you do have those receipts and things like that to back it up. All right. The next is, if you are using a tax professional or a tax software, maybe you're using TurboTax. TurboTax generally does have the different states and things like that. Certain states you don't even want to use a tax software for. You want to make sure that you actually have a tax professional. But you want to make sure that the software that you're utilizing, whether H&R Block, Cash App does taxes now. I was like, okay, Cash App, okay, I guess. But whatever software that you're using actually does both federal and state, and you want to make sure that it does them both, so that they are consistent at both platforms. So you don't want to have one person do your federal and the other does your state. Like, you want to make sure that everything's consistent, that the state knows what happened in your federal return and all that good stuff. Yeah, okay. The next is, ooh, what's going on? Okay. The next one is to actually make sure that you're following both your federal and state, because you will have it where your state will add up all the charges. They'll send you a letter and be like, oh, you owe this amount for this time period. States normally process their returns and everything a lot quicker because it's a smaller amount of people. Versus on a federal level, they have to deal with millions of taxpayers. For one state, they're dealing with maybe a million taxpayers, but That's nothing compared to the 30 plus millions of people that are filing taxes on a federal level. So just to give an idea, so your state taxes, they're gonna, if you owe them something like that, they're gonna hop on that and send you notices, things like that, a lot quicker than maybe the IRS may take a few years to actually catch up to you. Um, and then tax law changes. Keeping up with tax law changes is huge. Tax laws literally change every year. They can change every year. They generally do change every year. So they get add something different in there. Maybe it changes all the time. I get notices all the time about something changing somewhere. I got 3 today, and I'm like, oh, here we go. But yeah, so making sure that you're up to date as far as much as you can, because at the end of the day, you are still going to need a tax professional to really make sure that they optimize your particular situation. All right. Next is to maximize your deductions and credits. Yo, we are leaving way too many credits and deductions like on the table. It's crazy. And I'm like, just speak to someone. Just have a conversation. Hey, sit down. If a strategy session is $180, if a strategy session is this much, go ahead and pay for that strategy so you can actually know that, oh, I should have been taking advantage of this deduction, this credit, things like that. Or hey, I'm purchasing this. Is there a credit associated with that? Is I'm thinking about doing this. What kind of deductions and credits can I tap into if I do this? Like opening it up, the conversation. There is way too many credits and deductions that go unclaimed, and this is money that could help offset your tax bill. This is money that you could be putting in your pocket, credits that you could be that refundable credits that you could get on top of whatever refund that you're owed. This is money you're leaving on the table. So make sure that you're maximizing your deductions and credits. And one of the biggest ways that I see that people leave money on the table is throughout the year not actually organizing or keeping their information in one place. So you get to tax time and then you're like, oh shoot, I think I did this. Or I'm asking you, hey, do you have any supplies expenses last year? No, I don't think so. Well, did you order anything for your business on Amazon? Oh yeah, I did get da da da, and there you go. Because throughout the year happens. The year goes by in a blink of an eye, and we do not even remember what we had 2 days ago for dinner, let alone the entire year last year. Things that we purchased for our business, things that we even maybe donations that we made on another level, like to charitable contributions, things like that, or the tides. Making sure that we're mentioning these things, the medical expenses. I mean, the list goes on. Purchasing a new vehicle, the list goes on. Or realizing, oh shoot, I could have really just started a business, or I actually had some gig work last year. Somebody, I was doing, receiving payments on Cash App for this. For this thing that I was selling. Well, you're in business. Whether you know it or not, you have a business. Okay. So now you can take advantage of those deductions, certain credits, things like that. And you didn't bring that up during your tax session. So the tax professional didn't know you had a whole business running through your Cash App. And now you can't deduct the kitchen you was making the pies in. You can't deduct the storage spot that you were storing all the equipment in. Like, making sure that you're actually bringing these things up. But and one thing that we make sure that we do, we actually have our client portal. And I tell my clients, upload stuff throughout the year. If something comes up, put it in there. You have access to it. Don't wait until tax time and be like, oh shoot, I don't know. I don't remember what happened, because 9 out of 10, you're not going to remember. So many things happen throughout the year. Just put it in a folder. If you don't want to put it in our client portal, put it in a Google Drive. Throw it in a Google Drive. Google Drive, you can take a picture straight from your Google Drive and store it in there. Like, create a system where you're like, you don't have to complicate things. As soon as the waitress or whoever brings the bill to you, take a picture of it. Out of sight, out of mind. You don't have to keep the paper receipt, nothing. You move on with your life. Making just implementing those small things so that you don't have to feel like, oh shoot, I have to get QuickBooks. Oh shoot, I have to do this, and this is gonna like be daunting for you. But find something that or a system that's going to work for you, that's going to actually make sure that you do these things, because you're leaving money on the table. You're losing money. You're giving money away. Look, if you don't want your money, give it to me, baby, because mama just got her nails done today too. And you could have fit the nail bill, but you wanted to give the IRS more money instead. See, that's crazy. No, I'm playing. But seriously, make sure that you do those little things, so that you can take advantage of these credits and deductions. The next thing is and I kind of hit on like four different things just in that like one synopsis. I know I got kind of a little windy there, but yeah, okay. Making sure that you seek a professional, go pay for that strategy session, sit down. Look, you go to Starbucks, whatever, or whatever you do that you just spend your money on all the time. The $10 coffees that if you put that money together, you can afford to sit down with a professional and actually get some viable advice that's gonna move the needle for you. Um, Okay, so sit down with a professional, get that information that you need so that you're saving money on your taxes that's tailored to your particular situation. Stop getting this flyby information off the internet. Oh, you're getting bits and pieces. Someone sent me a video today, and the woman's going on about, oh, you should um you should make sure that they're talking about deductions. Oh, make sure that you're taking advantage of deductions because you're doing this and this with your business, and you could be getting that money back. You could be getting that money back. And I'm like, wait. You're not actually getting the money back. You're not getting refunded for the money you spent. It's just decreasing the amount of money that you're paying taxes on. That's how deductions work. It's not like the IRS don't say, "Oh, you spent $10,000 on a new car for your business, or we're gonna give you $10,000 refund." Like, no, that it doesn't work that way. But it does help. Hey, $10,000 deducted from your income, your taxable income. So if they were gonna tax you on $50,000, now they're gonna tax you on $40,000. Like, these bits and pieces of information that you're receiving, it's like you want to make sure you get the full picture and that is tailored to you specifically. So go see a professional. Like, this free information, this little bits of information is great, but this is general. This is general knowledge, and it's not tailored to you specifically. All right. Still great, but you want to make sure that you know what's for you. Hey, what do I need to know for me? Okay. Next thing is to be aware of the deadlines. April 15th, okay, tax day. Look, don't come to me April 15th and be like, oh shoot, I'm gonna upload all my stuff today. Can you get it done by this evening? Oh, we are going to file an extension because you waited until the tax day to realize you need to file your taxes. Okay. For my people that have partnerships, S corps, my pass-through entities, those people, your taxes, your partnership S corp taxes are due March. Okay, so don't come to me March 15th talk about, oh, can you do my business taxes today? No, you are getting an extension. Do not wait to the last minute. You want to make sure that you are aware of these deadlines. Okay, because if you do not pay the IRS by these dates, you do not get an extension to pay. Okay, if you don't pay by that date, you will get penalized, and there will be interest on top of it. Okay, so you want to make sure, hey, if you're a business owner, when's my deadline? You want to be in business, then you want to know those deadlines too. Okay. Or you're gonna get penalized and having to spend more money than you have to. If you want to pay the IRS an extra $2,000, $1,000, whatever the case may be, let me know so that you can reroute it my way instead. And then we can get it together. But no, but seriously, like, this is money that you don't have to dish out, and it's just by making sure that you stay on top of the deadlines. estimated tax payments. If you're a 1099 gig work, business owner, you have to make sure that you're making these payments quarterly to the IRS. Just like your W-2 employee, your employer is taking out taxes every paycheck. You don't just wait until the end of the year as a business owner and go, okay, I'm ready to pay my tax bill. No, that's not how it works. You have to pay throughout the year as well, or there is a penalty associated with not making payments throughout the year. So if you're going to owe more than $1,000 in taxes, then the penalty starts going from there. Okay, so this is a penalty that you can literally just making sure that you get that payment in before the quarter ends. It could alleviate that penalty. And also it helps with making sure that you're not overpaying the IRS, and that you're paying just what you need to. So that because at the end of the year, when you're paying penalties and all that other stuff. But if you're making that payment throughout the year, you're not paying that IRS extra and then on money that you could be making more money off of, things like that. You're making that quarterly payment, sending it over, you're avoiding the penalty, and you're avoiding having a huge tax bill at the end of the year. You're sitting in front of a $20,000 plus tax bill, and you're like, oh, shoot, I got to come up with that money because you weren't putting the money aside in a different account. You were using all the money, whatever the case may be. And, you're in. Now we're trying to figure out, well, how you going to make this payment? So quarterly estimated tax payments, avoid the penalty, and make sure that you get it done. Be aware of deadlines, okay? And that's on the federal and state level. I know I've been going federal heavy. Okay. The other thing is, so understanding on a state level, there is a different understanding, like your how state taxes affect you if you're working remotely. So if you're working for a company based in another state, what that state tax look like. Okay. And vice versa. If you're in another state, but you work for a company that's based out of Florida or whatever the case may be. So some states do have require you to file non-resident returns and things like that. So if you are working remotely for a different company in another state, this can affect your tax situation as well. Again, make sure that you're sitting down with somebody and see how that remote work is going to affect you if you're working for somebody in another state. And then adjusting your withholdings. So how do I make sure that I don't have to owe the IRS so much money at the end of the year? Oh my gosh, last year they didn't take out enough money out of my W-2 or whatever the case may be. Decrease your withholdings. So you're putting your withholdings too high when you complete that form at the beginning of the year. That form, that W-4, your employer has you fill out. Excuse me. Oh, you girl needs some. I was parched. Okay. So that W-4 that you fill out at the beginning of the year. At the beginning of the year, your employer says, "Hey, fill this form out. It's going to tell us how much in taxes, or how much we need to take out for taxes out of your paycheck based on your tax situation, meaning your filing status, how many dependents you're filing with, things like that." You're probably setting it too high. If you're filing single and you're still having the O at the end of the year, and you're probably having some income from multiple places. So if you have income coming from 3 other sources, those other sources don't know about the other incomes. So they're going to take out taxes just enough for that particular income. And there is a slot on your W-4 to account for income for other places as well. You just have to make sure you fill that slot out. If you need assistance with filing the W-4 and making sure that they're taking out enough taxes, you can reach out, schedule a strategy session. Or another thing you could do is just submit an additional estimated tax payment to the IRS. So if you're like, hey, I'm tired of this extra tax bill at the end of the year, maybe you want to do go on the IRS website, irs.gov/payments, and make a payment, an estimated tax payment towards your tax bill. Because you already know, hey, I generally owe, so I want to, pay some of that throughout the year versus having to make that entire payment at the end of the year. And then the other thing is looking at other tax advantage things like um, 529 plans. A lot of states do have credits and things like that associated with college savings plans, vehicle credits, um, even uh, depending on what kind of individual you are or citizen you are, they have credits associated with that, depending on which state you're in. Um, Givings, different things that you give to throughout the year. They have tons of credits depending on which state you live in. And I'm just mentioning a few, maybe from the top of my head. But yes, a lot of states do have quite a few different credits that you can tap into. So make sure that you're kind of like mentioning these things to your tax professional if you're in a state that collects state tax, or even if you're working for another state, or maybe you were in another state half of the year and you moved. And then last thing I want to leave on is making sure you are organized, staying organized throughout the year. I know the year gets ahead of us. We started the year off so good. We had all our resolutions. This was the year. We was going to get QuickBooks. We was going to track our mileage. We was going to reach out to strategic tax accountants, make sure that Wadleen was our accountant, all that good stuff. We was going to get a wealthy planner. And then the year got ahead of us. But the good thing about it, we can get back on the bandwagon. We could get back up and do it again. We could get back to it. Tomorrow's a new day. Today, and the day is not even over. But making sure throughout the year you're staying organized. Do that Google Drive. Utilize the client portal if you are one of my clients. Yeah, find a system that works for you with making sure you are organizing your things, because this can really help with saving you tons of money on your taxes. People keep asking me, how do I save money on my taxes? Oh, I'm tired of paying the IRS. I want to pay $0 in taxes. Whoa, you're not organized. You're not organized. You're not taking advantage of these deductions and credits. You're not sitting down for a strategy session with your tax accountant. You're not doing these things, but you want to pay $0 in taxes, or you want to decrease your tax liability. These are things that need to happen in order to make sure that you are decreasing your tax liability. You have to talk to these people. You have to set up these instruments within your business, within your individual life, to make sure that you're decreasing your tax liability. All right, y'all. Another episode of Sipping Wealth Live. Thank you for those who commented and interacted with me tonight. So thank you. If you are watching this after the live, or you just tuned in like towards the end, go ahead and drop a comment, engage, share. But yes, tune in next week for another episode of Sipping Wealth Live. I will be going over modernizing your finances, and utilizing what are some great tools that you can utilize to help like streamline like managing your finances, your taxes, and all that good stuff. My system that I use, like people always compliment our tax system, like how easy it is to have us file your taxes, because my clients, they fill out the form, they upload their stuff, and then they meet with me for 40 minutes, 30, 40 minutes, and they're finished. And they're like, what? Like, I'm telling you, like, we flowing through this system. Like, our system is doing what it need to do. Okay. But yes, I want to make sure y'all are modernized. Y'all take advantage of the technology age. You can do all this from your phone. We have clients that literally they file their entire taxes with us through their phone. They get on the video chat, everything through their phone, upload everything through their phone. But making sure that you take advantage of the technology. So we are going over technology advancements, how you can, what tools you can utilize to help streamline your finances, streamline your taxes, get everything good, cohesive, stress-free. Because we're in our stress-free era. Yes. But yes, thank you y'all for tuning in to another episode. I'll see y'all next week at 6 p.m. Like I said, be sure to subscribe and follow the Sipping Wealth YouTube channel. Sipping Wealth YouTube channel. Nothing like good money talk. Right. Let's talk money. I love that topic. All right, y'all. Have a great night. And I'll see y'all next Tuesday.